be advised that this recorded webinar has been edited from its original format, which may have included a product demo. To set up a live demo or to request more information, please complete the form to the right. Or if you are currently not on CSC Global, there is a link to the website in the description of this video. Thank you.
Hello everyone, and welcome to today's webinar, Doing Business Internationally, Luxembourg. My name is Christy DeMeo-Ziegler, and I will be your moderator. Please join me in welcoming our host, Helena Ledic, an Associate General Counsel for CSC in the Chicago office. Helena?
Thank you so much, Christy. Hello, everyone. I am delighted to introduce my colleagues today from Luxembourg. First, I'd like to introduce you to David Sarfis, the Managing Director for CSC in Luxembourg.
Hello.
Next will be FX Goossens, the Head of Corporate Legal Solutions in Luxembourg.
Hello.
And then finally, Salvatore Rosato, the Head of Capital Markets in Luxembourg for CSC.
Hello, everyone.
So our agenda for today's program for Doing Business Internationally in Luxembourg is, first we'll talk a little bit about CSC, and then we'll get into that very important question and answer of why Luxembourg. We'll go into foreign investments in Luxembourg, that domestic or foreign status, what to know about what to know about doing business in Luxembourg, and how CSC can help. For more than 120 years, CSC has been the partner of choice for companies around the globe. We're trusted to handle everything from incorporating a company through maintaining compliance, to doing corporate transaction work, protecting digital assets from the threats of the online world, and everything in between. We offer the solutions and technology that keep businesses running in the background, allowing clients to focus on the important work of growing their business. CSC has offices and capabilities in more than 140 jurisdictions across Europe, the Americas, Asia Pacific, and the Middle East. We're a global company capable of doing business wherever our clients are, and we accomplish that by employing local experts in every business we serve. First, a few facts about Luxembourg. Luxembourg is the largest investment fund center in Europe and the second largest in the world after the U.S., with $5.5 trillion AUM in investment funds. It's about the size of Rhode Island, and it's neighbored by Belgium, France, and Germany. In fact, 70% of the workforce are cross-border employees from those countries. There are 3 official languages in Luxembourg: Luxembourgish, French, and German, but English is also widely spoken, and 45% of the population speaks 3 or more languages. And Luxembourg has got the highest GDP per capita in the world. In 2021, it was over 135,000 US dollars. So now let's hear from our Luxembourg experts of why Luxembourg. David, why don't you talk to us first?
Thanks, Helena. I think, as you said, with more than $5.5 trillion of net assets under management, Luxembourg is the largest investment fund center in Europe, and of course the second largest in the world after the United States of America. But also it's the largest global distribution center for investment funds, with funds offered in more than 70 countries around the world. Luxembourg investment funds have a dominant share in both the retail and institutional marketplace in Europe, and they are the vehicle of choice in many parts of Asia, Latin America, and the Middle East. Luxembourg is also a major center for alternative asset classes with more than $850 billion euros of assets managed by alternative fund managers. So if you take a step back and you think about this, how did Luxembourg build these strong positions in the global investment fund industry? I think it revolves around 3 principal concepts: international orientation, excellence, and stability. Luxembourg is a founding member of the European Union. It's also a member of all the principal international organizations. The country's strategic location at the heart of Europe and its traditional openness towards cross-border integration established it established itself very early as a major international financial center. Furthermore, the AAA-rated economy, Luxembourg sound public finance framework, and is very politically stable. Its social stability based on the culture of consensus makes it a great place to work and do business, and the high quality of living makes it a very pleasant place to live. The backdrop to all this has over the decades attracted thousands of investment firms and service providers who collectively contribute unrivaled knowledge and expertise to the global investment industry players, whether they operate from Luxembourg or not. François-Xavier, what would you say about this?
Yeah, indeed. Thanks, David. So when it comes to corporates, I couldn't agree more with David. Luxembourg is the European hub for large corporate groups with their headquarters or treasury center based in Luxembourg. We also do have quite a lot of listed entities, like, for instance, ArcelorMittal. They do have their European head office based in Luxembourg, and there are many more examples. On the private wealth side, the Lux legal regime is welcoming for family offices because of our laws that are into force that offers quite a lot of flexibility for this kind of structure. What are the main reasons for that? I do see three main reasons. The first one is the presence of large international banking groups from all around the globe, from Europe, North America, Asia, and Latin America. And they offer full scope of services to their clients. It actually helps in the sense that in case the client has already an existing relationship somewhere else in the world, they can actually use their preferred bank in Luxembourg, which can definitely speed up the process when it comes to bank account opening, for instance. Perhaps one side note on the banking ecosystem we do have in Luxembourg is also welcoming e-money financial institution, which is slightly different to the standard banks that we are all working with. E-money financial institutions are not licensed by the Luxembourg financial regulator, meaning that they can be a bit more flexible in the way they are onboarding new clients. So I think it already happened to all of us when we are under time pressure for a closing, and we do not have enough time to open a bank account with a standard bank. Those e-money financial institutions might be an alternative that can tremendously help in case of time pressure. The second reason I do see is that Luxembourg offers, as David mentioned, a stable political regime, and the tax treatment of existing structures and structures to be implemented is quite predictable. In the sense that because of the stability that we do have, the tax treatment of a structure can be predicted quite accurately. So the government will never take any sort of or adopt any sort of new law with any retroactive provision, and that helps in terms of predictability when it comes to tax treatment. And the third reason I do see is, and I think, Helena, you briefly touched upon that, Luxembourg is really at the heart of Europe, meaning that we do have colleagues from all over the world, and speaking, obviously, English, German, French, and many other languages, including Chinese, for Chinese clients at CSC. And it gives us a competitive advantage because all clients can actually be served and communicate with us in their native language, and that tremendously helps as we are here to support them on a day-to-day basis. So those are the three main reasons why Luxembourg is a very attractive place for investors. Salvatore, I do not know if you have anything to add from a capital market perspective.
Sure, and thank you, FX. At this point of the webinar, yeah, I also would like to share some words on my business. I would like actually to spend and explain why there is a leadership position of Luxembourg also within the entire European debt capital market. Actually, if we look at its number of transactions, the volumes of transactions, the number of issuing entities, Luxembourg is positioning itself with no doubt as a leading place for the domiciliation and administration of the SPV issuing debt securities. But how can this be explained? Well, the primary reasons for that are in part those supporting also the funds and corporate success. such as having an investor-friendly market, a responsive regulator, and also other reasons related merely to the debt market, such as the leadership position of the Luxembourg Stock Exchange in Europe, and finally, the combination of high protection and flexibility offered by the Luxembourg securitization law.
So let's talk now a little bit about what we need to know about doing business in Luxembourg. And David, we got a question that tees up this slide over here that came into the Q&A. Somebody wants to know, what is the Luxembourg Fund Toolbox? Can you talk about that?
Absolutely. Great. That's a great question. Thank you. I think just before I go into trying to answer that question, I think what's important to understand is that there's the strength of the fund structures in Luxembourg is primarily built on 3 pillars. And I'd say those 3 pillars are UCITS, which really means undertaking of collective investments in transferable securities, AIFs, AIFs, which are alternative investment funds, and the final one is RI or RE, which is responsible investing. So if you step back and look at UCITS, they're considered to be the best in class for when it comes to investor protection. It really is liquid asset vehicles, and they're distributed publicly to retail investors across Europe. There are different types of AIFs, or alternative investment funds. You have the FCPs, Fonds Commun Placement in French, which are managed by a Luxembourg management company. You have CCAVs and CCAFs, which are in French, Société d'Investissement à Capital Variable, but really are open and closed-ended investment companies. And you have, and the types of asset classes that you deal with in the AIFs are primarily private equity, real estate, but also hedge, debt, and infrastructure. So if you look at if you think about the collective investment schemes, you have the UCI Part 2 funds. And I think what I'll do is I'll kind of talk a little bit about the different types of funds, which is really the answer to the toolbox. So the UCI Part 2 funds are investment funds that invest in all types of assets. They can be sold to all types of investors, and Part 2 funds that have an EU AIFM management company can market their shares, units, or partnerships interests via a specific passport to qualified investors across all Europe. The CIFs, which are specialized investment funds, also deal with all types of assets. They're sold primarily to qualified investors, and they have the same feature where you can distribute you can distribute to qualified investors across all Europe if, of course, you have the EU AIFM. Then we go into the SICARs, which are the investment companies for risk capital. There's about 350 SICARs in Luxembourg right now. They're really designed for private equity and venture capital funds. They're sold to qualified investors. You have the same feature where you can distribute all over Europe if you are using an EU AIFM. One of the big investment types of structures are the RAIFs, which are Luxembourg Reserved Alternative Investment Funds. There's over a little bit more than 2,000 of those in Luxembourg currently. You have all types of assets. They're not subject to CSSF approval, the CSSF being the local regulator here, but they must appoint an external AIFM. And if the AIFM is domiciled in the EU, you can sell to qualified investors all over the European Union. There are other types of features and other types of the fund structures. The next one I would like to talk about is the LTIF, the European Long-Term Investment Fund. So that's a pan-European regime for AIFs, allowing investors to put money into companies and or projects that really need long-term capital. I won't go into the details because it can get relatively sophisticated, and it's probably not the object of our conversation today. You also have the EU VICA, which is the European Venture Capital Fund. But that just provides a whole framework for VC funds, and you have specific requirements for investments, but you should just be aware that exists. There's also the European Social Entrepreneurship Funds, the UCEFs, which is really a framework for social entrepreneurship and has very specific requirements. I think one of the structures I haven't talked about, which is very important, are the SLPs, the Special Limited Partnerships. So for those of you who are interested, you'll probably hear about SCSPs. There's over 8,000 of SCSPs all over Europe, and primarily in Luxembourg, of course. But that's a very specific type of structure with very large contractual flexibility. To just give you a little bit of highlights, you can set this up in less than between 2 and 4 weeks. There's no prior regulatory approval. You have unregulated alternative investment fund under the AIFM directive. You have unlimited number of investors. The manager should typically be regulated when the AUM is above 500 million for closed-ended funds or 100 million euros for open-ended funds. These SLPs can invest in any type of assets, equities, participation, bonds, loans, artwork, cars, different types of hedge strategies, liquid or liquid instruments, real estate, private equity, etc. No depository bank is required in this particular instance. No audit required. So it's a very, very, I would say, flexible feature. And then, of course, you have the final pill that I was talking about, which is really the responsible investing. So there's a lot of ESG metrics, of course, in Europe. And you have there's full compliance with the SFDR, which is the Sustainable Financial Disclosure Regulation. And I think Europe in general, but Luxembourg in particular, is at the forefront of all the ESG metrics. So there's a lot of opportunity here. That said, I want to make sure that François-Xavier has time to talk to us about SPVs, which is equally as interesting and beneficial for the people who are listening today.
Yeah, thanks. Thank you very much, David. So for special purposes vehicles, the so-called SPVs, I think we briefly touched upon the predictable tax treatment that Luxembourg is offering, and this is seen by the investors that are already investing through Luxembourg as a competitive advantage. I think it might be worth to spend a bit of time on the legal structures that we do see in Luxembourg, and perhaps trying to demonstrate that they are perhaps more flexible than the ones that we can find in other European countries. So in Luxembourg, we do have 3 main entity types. First one being the public limited liability companies, so-called SAs, private limited liability companies, SALs, and limited partnerships. What is important to note is we do have actually 2 categories. The first one is composed by the SA and the SALs, and the second one is composed by the limited partnerships. And it's quite interesting to see that the way the legal regime is structured in Luxembourg can accommodate both investors from civil law countries, but as well as investors coming from common law jurisdictions, because the limited partnerships is very close to the US-UK partnership in the way they are governed and incorporated. So, for instance, the only constitutional document that we do have for limited partnership in Luxembourg is an agreement that is signed by the investors and the private seal. And this is very, very close, or even perhaps similar to what we do see in the UK and the US. And it gives obviously a bit of comfort to UK-US investors as they find a very familiar legal environment using limited partnerships. On the other end, for SAs and SAL, those type of entities are a bit less flexible than the limited partnerships. But still, if you compare with Germany, Ireland, and France, for instance, the Luxembourg legal regime remains much more flexible in the sense that, for instance, in Belgium, only taking that example, as soon as you do have an SA, so i.e. a public limited liability company, you need to have an auditor appointed, which is not necessarily the case in Luxembourg, and certainly not for SALs. So that's why I think Luxembourg is a right place for investors, even if they are coming from common law countries or civil law countries. And I think that's something quite interesting to note about Luxembourg regimes. So back to you, Helena.
So, David, tell us a little bit about how Luxembourg became the leading European domicile for the accredited investment funds. How did that happen?
I think the answer here is really in those 3 pillars. Really, the fact that Luxembourg had a first mover advantage to servicing accredited vehicles, and then of course the UCITS the evolution of, I'd say, of those vehicles to what they are now, to create what is that Luxembourg fund toolbox has just created, it just has made it the longest lasting kind of jurisdiction and the oldest jurisdiction in Europe in which you find all these vehicles. So there's a lot of everyone's acclimated to the environment. And of course, you have the cottage industry in which we're in, which is really, all the ancillary services that serve, the industry to ensure that it can operate and function well, which is extremely developed here. And I think that's the real reason.
Thank you, David. And now let's have FX tell us a little bit about corporate and PE structures.
Thank you, Helena. I think what we do see here is a typical private equity structure in Luxembourg. Obviously, on purpose, I put on the top of the chart a US PLC or LLC. And then I'm going to start focusing first on the left side of the org chart. It is actually depicting a situation where the top US company is holding 10% of a Luxembourg entity, which is in its turn is holding 100% of a sub-Luxco holding directly the asset. So what's important to note is actually the shareholding percentage. So 10% is held by the US entity. It's actually important to know that for the participation exemption that we perhaps all know about, because on the left side of the chart, we do have another scenario, which is scenario B, where it looks very similar, except the participation percentage that we do have between the US top holdco and the Luxco B, where the US entity is holding 5% only. Then what is important to look at is the total value of the asset, if it's above or below a certain threshold, which is actually 1.2 million euros or the equivalent in dollars. So this is typically a private equity structures that we do often see here in Luxembourg for a very simple reason. It's tax efficient when the asset starts distributing dividends, for instance, or repatriating cash up the chain. I don't know if there is any question on that one, Helena.
Well, it actually affects a very good thing that you brought that up. We asked someone came in through the Q&A, the questions, and they wanted to know a little bit more. Could you explain a little bit more about the participation exemption?
Yeah, that's exactly. Thanks, Helena. So very good question. This is actually the purpose of this slide. Assuming that all the conditions that are in the slides, so the percentage of shareholding that needs to be either 10%, or if it's below 10%, the total value of the investment has to be equal to 1.2 million euros or the equivalent in dollars. The participation exemption will actually allow to repatriate cash or to distribute dividends from the assets up to the US company free of tax, assuming that this asset is held for a certain period of time, which should be at minimum 12%. This is the purpose of the participation exemption that we often see here in Luxembourg, and I think we do have that often with U.S. companies on top.
So now FX is going to take us through the comparisons and the differences between the two main structures in Luxembourg, the public limited companies and then the limited liability companies.
Yeah, thank you, Helena. This slide can actually be tidying up with the previous one where we depicted a typical PE structure. So in the org chart that we just discussed together, the Luxembourg entities, I didn't mention anything about their legal form. They can either be public limited company, SAs, or limited liability company, SAL. So that's important to know. So the participation exemption can work with both of those type of Luxembourg entities. So when it comes to incorporation, it's the same requirement that needs to be fulfilled. So we need to have a notarial deed enacting the articles of association of either an SA or a SAL. So I'm not going to spend too much time on that one. SAs and SALs, they do have both a legal personality, which is distinct from a partnership. When it comes to capital and the share capital that needs to be subscribed and paid at the time of the incorporation, there is a difference between the SAs and the SAL. So for an SA, for instance, we need to have a minimum share capital of 30,000 euros, or the equivalent in dollars, and it has to be paid up at least 25% at the time of the notarial deed, i.e. the incorporation deed. For SALs, it's a bit more flexible in the sense that the amount that is required to incorporate a SAL in Luxembourg is 12,000 euros, and it has to be fully paid up at the time of the setup of the company. For SAs, and perhaps this is the right momentum to emphasize that we are using SAs for large groups, in the sense that we can go between 1 and 100 shareholders for an SA, which, as you can imagine, 100 shareholders, it's already a quite significant numbers if we are excluding listed entities. For SAL, it started from 1 as well, but I've rarely seen SAL with more than, let's say, 10 or 15 shareholders. So that's one of the big differences that we do see in terms of number of shareholders between SAs and SAL. The management body, it's actually a board that are managing the two types of entities. For SAs, it has to be a minimum of 3 board members. Can only be 1 in case there is 1 shareholder for an SA. And for a SAL, it can be minimum 1 shareholder. The audit is mandatory for an SA and not mandatory for an SRL. However, if the shareholder decides to appoint an auditor to certify and to testify that the financial statements are reflecting the financial situation of the company, they can do it, of course, but it's not mandatory. And this is tying back to the discussions around flexibility we do have in Luxembourg. And finally, on the annual accounts, both of those entities need to file their annual accounts once a year, which is actually 6 months after the closing of the financial year. So this is very high level, the main difference that we do see between SAs and SAL. I didn't spend too much time on the limited partnerships, as it's very, very similar to UK and US limited partnerships. So I think it's perhaps a bit more interesting for the audience to know a bit more about SAs and SALs.
So let me ask you FX. You did mention something about substance. Can you explain a little bit more about that?
Absolutely. Substance. Let me think how I can define substance, because you will never find in any sort of law in Luxembourg a reference to substance. The entire concept means that any sort of Luxembourg entity needs to have a certain footprint here in the country, in the sense that the idea is to avoid that any sort of foreign tax authority can challenge the nationality of the Luxembourg entity. So there were many scandals that were published in the press the last few weeks, months, or even years. And they were all about indirectly linked to substance. So we do need to have, for each and every Luxembourg entity, a certain level of substance, which actually means the following. If you want to be on the safe side and not being challenged by foreign tax authorities saying, hey guys, this is not a Luxembourg entity, this is actually a German entity. So if you want to avoid this kind of situation, you need to make sure that certain criteria are met. The first one being the composition of the board of manager/director. It's considered as safe to have at least 50% of the board members being either Luxembourgish residents or professionally residing in Luxembourg. Then another criteria that tax authorities will look at is the frequency of meetings that are physically held in Luxembourg. So what is common practice is the following, that the board meeting that is going to be called for the annual accounts approvals we just discussed a minute ago, typically this one would require a physical board meeting in Luxembourg, as well as any sort of strategic decision. So let's imagine that a Luxembourg entity is about to take a decision about an investment. It's highly advisable that all the board members, even coming from the US or from anywhere around the globe, will come to Luxembourg to hold that board meeting. Another criteria that is very strong, by the way, is making sure that the Luxembourg entity has an office here in Luxembourg, either buying an office, which is a situation that we do not often see, or renting an office. This is actually linked to another criteria, which is having somebody on the payroll. So CSC, for instance, is offering that option. So for we are servicing holding entities mainly, but even holding entities can be challenged, and their nationality can also be challenged, meaning that we can offer to a client that a few employees or even a single employee can spend a certain amount of time on their file and therefore being on their payroll. This is an element that the tax authorities are looking at to assess if there's enough substance here in Luxembourg. I keep it very high level. There are a lot of doctrines and core decisions around that, but I think those are the main points around substance if we do not want to be challenged by foreign tax authorities around the nationality of the Luxembourg entity. Does that answer the question?
Well, thank you. Yes, that did. Thank you. Thank you, FX.
Welcome.
So now we're going to be hearing from Salvatore about how or why Luxembourg is attractive as a jurisdiction for debt capital markets and securitization.
Thanks much, Helena, for introducing this central topic. Well, as mentioned earlier, Luxembourg is becoming more and more the go-to jurisdiction for the domiciliation and administration of European SPVs used for issuance of debt securities. I will try now to clarify the benefits of setting up a DCM structure in Luxembourg, and for the sake of simplification, let me start with some commonalities. Same as funds and corporate business, also Luxembourg capital markets benefits from a politically stable country with very low public debt. It's a multilingual environment, and the fact that it is the most multilingual country in Europe, which can not only streamline relations with service providers, advisors, and public administration, but also can allow the financial sector regulator to accept official documentation in English, French, or German language. Another benefit is also the presence of a responsive regulator, a leading stock exchange, and a responsive financial sector supervisory authority, which is proven, for instance, in dealing with the complex approval process of offering circulars and also the complex listing of public securities. It is worth to mention also the well-established ecosystem of post-trading service providers covering all aspects of collateral management, including clearing, settlement, custody, and asset services. Moving on, among its flagships, Luxembourg also counts the Luxembourg Stock Exchange, which is the European leading venue for public debt listing, and the first and leading platform for sustainable security on the globe. But finally, and last but not least, I believe that our common crown jewel is represented by our securitization law. In fact, by setting up a securitization platform in Luxembourg, all our clients, investors, and arrangers can benefit of most likely the best combination of protection and flexibility present in Europe. and take finally advantage of a full range of options for structuring deals. For instance, investors have the possibility in Luxembourg to invest in a wide range of asset classes by using multi-compartments and at the same time obtaining high level of risk protection thanks to some specific clauses, which are called the limited recourse, the non-petition, and the ring fencing, which are provided directly by the securitization law and as a consequence may benefit of the highest degree of enforceability.
So, Salvatore, you mentioned that the securitization law in Luxembourg is the crown jewel. Can you tell our audience a little bit about the different asset classes that can be securitized in Luxembourg?
Of course, and good question again, Helena. The Luxembourg law allows the securitization of many types of assets, risks, revenue, and activities, and makes securitization accessible to all types of investors, institutional or individual. It is in fact allowed to securitize an extremely wide range of assets, such as securities, including shares, loans, subordinated or non-subordinated bonds, by performing the so-called repackaging. Then risks linked to debt, so-called synthetic securitization. Movable or removable properties, trade receivables and supply chain finance, prime residential mortgages called RMBS, auto lease, credit cards, infrastructure and project finance, Islamic financing, non-performing loans, and finally, in general, any activity that has a certain value or future income.
So now that you described those, can you explain a little bit about how you see the Luxembourg securitization law within the larger European context? How does it fit in?
Yeah, definitely. That's another great question, Helena. Well, in my opinion, the Luxembourg securitization law may offer to investors and arrangers the right combination of flexibility and protection in structuring securitization platforms in Europe. The law was adopted in 2004 and has been recently modernized in March of last year. And the last changes, including the famous allowance of the active management of repackaged debt and the opening to new forms of funding, have increased even further the country's investor toolkit, which was already very competitive in the past, and in my view will definitely represent an additional boost to the local securitization market for the future.
Now that we've learned from our Luxembourg experts, David, FX, and Salvatore, about why Luxembourg, the foreign investment, and what to know about doing business in Luxembourg, let's now talk about how CSC can help you. So, FX, can you get us started off about CSC in Luxembourg and tell us about the corporate services that CSC offers?
Yeah, absolutely. Thanks, Helena. So CSC in Luxembourg can be seen as a one-stop shop. So we can support our clients from during the entire life cycle of the company, actually. So since the incorporation that we briefly discussed earlier during this webinar, till the liquidation and the radiation of the company within the Luxembourg Trade Register. So we are here at each and every step of the incorporation during the life cycle, annual accounts approval, investments, exits, and liquidation. So we are supporting our clients in at the first phase, which is the entity incorporation, by coordinating with the tax advisor, coordinating with notaries, reviewing articles of association, and making sure that the company is effectively incorporated in Luxembourg and that the notarial deed is published in the Luxembourg Official Gazette. We are supporting our clients by providing accounting services to make sure that at any time they are in good standing and fully compliant with the legal and regulatory framework that we do have here in Luxembourg. So it starts by approving the annual accounts once a year, supporting them in any sort of payroll activity, or making sure that we are taking care of cash management by dealing with the banks, and making sure that the annual accounts are audited in case it's either mandatory or contractually required, depends on the needs of the client. And for that, we are offering corporate secretary services, which actually means that we are taking care, very high level, of drafting board minutes and shareholders' resolutions, evidencing the decisions that have been taken either by the board, which is the governing body of the Luxembourg entities, or by the shareholders when a strategic decision has to be taken. So perhaps, Salvatore, you can explain us how we can support our clients when it comes to compliance and tax compliance services?
Of course, FX, thank you very much. So other specific areas where we have seen an increased client's demand of services are, as you just said, FX, compliance services, regulatory reporting, as well as tax compliance services. Such categories are heavily exposed to new law changes, and this might be one of the main reasons justifying the trend of growing demand of outsourced to us from clients. Such services include, inter alia, for instance, AML, KYC due diligence and periodical review, specific financial reporting to be submitted to the Luxembourg Financial Market Supervisory Authority or the Central Bank of Luxembourg, FATCA CRS reporting, as well as the provision of FATCA responsible officer, DAC6 reporting. As to the tax compliance services, they typically include the VAT registration and the registration of the SPV, the VAT returns preparation and filing, and then tax provisions calculation, and finally corporate income tax return and filings. After having said that, I will let you, David, if you don't mind, to cover the rest of our Lux expertise.
Thanks, Salvatore. I think, rather than kind of like discuss all the different things we do, I think that, the people listening to this webinar today will I think they should just remember that we provide end-to-end solutions to alternative asset managers with the ability to set up and maintain entities at the global and local fund and SPV levels. I think we also deliver a comprehensive range of corporate client services related to asset transactions and administration for corporate vehicles. So overall, we've been in business in Luxembourg since 1955. We have a lot of experience. There's over 600 people here in the country serving CSC and our clients. So we're very committed. We really understand the environment very well, and we are very eager and open to share our experience with you. Thank you.
So FX, why don't you tell us a little bit about the global coverage that CSC offers through our global subsidiary management?
Yeah, my pleasure to do it. It's actually one of our biggest competitive advantage if we compare CSC with our main competitors. Why? I think if we try to put ourselves in client shoes, we can easily imagine that for multi-jurisdictional clients, so clients that do have a presence perhaps in Europe, in the US, in India, or in China, or in Asia, not being on the same time zone can easily be quite a bit of a challenge to deal with a service provider, because we are all working in different time zones, and the multi-jurisdictional clients, per definition, have contact with the Luxembourg office, with Amsterdam office, with Chicago's office, and it can drain quite a bit of energy to deal with all those different offices. So we came up with the idea of leveraging on the concept that remains close to our hearts, which is client centricity. and making sure that for those clients, we do have only one dedicated team working on those accounts, meaning there is a few people that are going to be the go-to person for our multi-jurisdictional clients, and they're going to take on them the burden of the coordination between the different offices that are globally servicing that specific client. It's in place. It works quite well, and the first feedback that we receive from clients is pretty positive around it, because it simply helps to build a trusted relationship with our clients, because they know to whom they are talking to. They're going to call always the same team, always the same person. They know who's in charge of their accounts, and those guys, the front guys, are actually supported by large teams. Don't forget a thing, we are present in more than 140 jurisdictions, so we need to offer that service where we are, let's say, coordinating with ourselves, and that's what the GSM concept is about.
Now that you've learned about Luxembourg and the services that CSC can offer with Luxembourg, we'd like to remind you again that we are the business behind business. As you can see from the solutions that are listed here, we're the partner of choice for global companies needing expertise in business administration and compliance, fund solutions, transactions and lending, capital markets, domain security, and brand protection. Whatever your company needs to stay in compliance, transact business, and become secure against threats of the online world, CSC can help.